Guys, we need to talk about the IRS and why it seems like they have no idea what they're doing with crypto. I mentioned this on my stream before, and I even spent a stream a couple of months ago dedicated to this. But it's really not because they want to squeeze the most out of us. They would have implemented certain regulations long time ago if they did that. But they keep hopping around on their regulations, and it keeps getting delayed and pushed back, just like this new accounting method one. By the way, that's just telling exchanges to use the first in, first out method and basically have it standardized across. And first in, first out in terms of an accounting method is probably the one I would say makes the most sense. It's basically saying like the Bitcoin, if you buy and sell Bitcoin, the one you bought first is the one you sell. Now, since all Bitcoin are pretty much the same as each other, there's really no defining characteristic from one Bitcoin to the other, it makes sense that the first one you bought is the first one you sold. A lot of people prefer the last in, first out, which means like the last Bitcoin you bought is the first one you will sell. And that has certain tax benefits, like depending on when you actually bought and what the price is. Like if you bought like years apart from each other, then last in, first out is definitely better, because last in, first out means like, say you bought like 2 years ago, the price is going to be higher than when you bought like 6 years ago, because each cycle it does get higher. So when you sell, the profit that you gain from last in, first out will be smaller than first in, first out, which means you have to pay less taxes. However, if you basically invested in the same cycle within like a 2-3 year period, it probably doesn't matter, because the one that you bought like closer to your timeline could actually be lower than the one you bought in the past. And most people, a lot of times I think most people will buy a lot of coins all at once and they'll sell them all at once. And in that case, it doesn't actually matter which accounting method you use, whether it's first in, first out, last in, first out, or weighted average. At that point, it doesn't really matter. Only if you're like a super long-term investor that invests and has held Bitcoin across multiple cycles without selling would that actually matter to you. The IRS is basically trying to standardize everything. But why are these rules just like seems like so obsolete for crypto? I'm not talking about LIFO or FIFO. I'm talking about like like the tax on transaction. I've said multiple times that they would just save themselves a lot of trouble if they did tax on cash out. And they would actually get a lot more money if they did that, because more people would actually follow the rules and more people would file. If you make things hard for people, like try to do tax per transaction on DeFi and all that stuff, they're not really going to report. And the IRS just simply does not have the manpower to check back through all the blockchains. Some people are like, oh, they're going to use AI to do all that. But they're going to make so many mistakes, and there's going to be a lot of lawsuits, and they just don't have the funding or the manpower ever to really do that. Yeah, they're hiring a lot of agents, but they're hiring them over 10 years, and most of them are going to go to replace the people that are actually retiring. So the agency realistically is never going to have that much manpower to handle an ever-growing amount of people that are going to get into crypto. The reason like they have so much trouble is they've never had anything like crypto before. And I'm not talking about investments, because people have been investing in real estate, especially stocks, forever. And although crypto is very much like stocks at this point, there is one very, very big key difference, especially when it comes to taxes. No one trades a stock for another stock. It's not like there's swaps between like, I'll swap you 10 shares of AMD for 5 shares of Microsoft or something, which is something we do all the time in crypto. I would say most of our trades are crypto to crypto, and they just never have like an asset class do that before. Like, yes, I do understand there are certain things like property swaps. I'll swap you my house here for your house over there. But that's actually really, really rare. And it's not something that happens all that often. Whereas in crypto, it happens all the time. So they actually have no idea how to handle that, because the IRS does not want to deal with receiving cryptos for tax payments. So they want all the taxes in USD, but when you're swapping, you don't realize a profit in USD. And so it makes it really, really hard to tax. And the taxes could actually force a lot of people to cash out before they actually want to pay the taxes, which means, guess what? They're not going to report it because they don't want to cash out at that point. So the thing is, like, if you're buying ETFs, this doesn't affect you. If you're only a Bitcoin buyer and you cash out for cash, this doesn't affect you. But if you're someone that actually does DeFi or any kind of like crypto to crypto swap, mainly DeFi, I would guess, and for swapping in like for smaller coins on the various DEXs, you're most likely not going to report if you swap a large amount. Why? Because if you've actually like had any kind of profit in that swap, you have to pay taxes on that profit that year, but you don't have the money to pay taxes because you didn't actually cash out for USD, which is why it makes a lot more sense to actually just tax when you actually cash out for USD. And that's why like you're going to get a lot of people just not reporting those swaps anyways. And and because it's so complicated, a lot of smaller investors are just not going to report crypto on their taxes altogether. And it's not worth it for the IRS to go chase $500 because it costs them a lot more than $500 to actually go chase after someone. Whereas if you just made it easy and did tax by cash out, more people would actually file and do an honest job filing, and you would get a lot more money. But see, the IRS wants to get all the technicalities right, but in doing that, they're actually costing themselves a lot of money by by making it hard for people. They're trying to treat it exactly like the stock market or any other asset, but you don't, in any other asset class, you don't swap one asset for the other. You basically just swap assets for cash. And they need to realize that there needs to be a different way to handle those things. And they need to cash out when they swap for cash because they themselves are only taking taxes in cash. Now, if you can pay them taxes in like Doge or Shiba or whatever, that'd be great. But I'm pretty sure they don't actually want that. And if they demand the taxes in cash, there should be a rule that like whatever money you demanded in, you would like the person has to cash out to that specific coin, basically, before you actually demand taxes. Now, I think it's different, like for crypto payments and like salary, so there's no loophole. If you get your salary paid in crypto, you should have like those taxes should be automatic. It should be like taxes on any other type of salary if you actually get paid in crypto. But if you're just doing like trading or swapping profits, I think it should be when you actually cash out, you get crypto. I think the IRS would have a lot more compliance that way. I think they would make a lot more money that way. And it would save them a lot of headaches from going after people that owe them like $200, which a lot of times they won't find. And it's just going to cost them more money in the long run. So let me know what you think. That's why the IRS is so confused, because they've never had an asset like this before where they trade asset to asset. And they need to come up with a new set of rules for this instead of just treating it like every other asset class, because it behaves differently from every other asset class. Thank you and have a nice day.